Good morning, everyone. Cary Minden with CJM Realty. I'm here with my friend Andrew Paul from Benchmark Mortgage. Andrew's a former Navy SEAL. Thank you for your service, by the way. 'Cause that's amazing. And he's down in San Diego, but he does, as a veteran loans are his passion, and he does VA veteran loans in what I think you said 42 states now. So the Western US, that's most everywhere, right?
That's most of the country at this point. Yeah.
One of the questions I have for you today, in this particular segment is why should someone use a VA loan? What's the benefit?
Yeah, the VA loan has gained a lot of popularity in the last few years. It's funny, Kira, when I first got into the business, I was in the SEAL teams, did a couple of deployments, and left active duty in the late 2000s, and went right into the mortgage business. And at that time in the market, there was all this other financing that was available. There was 100% financing for, regular civilian people and these funky loan programs. And the VA loan hadn't really adapted or evolved much around that time. And so it wasn't being used very much. I've been doing VA loans back before it was a thing, before it was even like popular. Now, in the last decade, 10, 15 years, it's gained a lot of traction. But to answer your question,
the marketing of the VA loans definitely stepped up in the last decade, I would say. Yeah.
Absolutely. And to the benefit of the veteran, because I would just say this, the VA loan is a great program. It's a phenomenal program. It's a huge benefit. And more people know about it today. But I'm amazed every day at how little people really know. So look, here's the main big benefit that most people know, but I don't want to take any of that for granted. The main big benefit of the VA loan is that it's a 100% financing loan. So you can buy a house with no down payment. And it's a benefit that never expires. And that's like one of those misconceptions or things where people sometimes don't use that benefit. Had met a Vietnam veteran guy one time, was talking about the program, and he commented to me almost in passing, goes, "Oh yeah, I had that VA loan benefit at one point, but it expired." And I was like, "Whoa, what do you mean?"
Right.
So this guy was kind of going, it never expires, right? So here's this guy who's served in Vietnam, who's earned this benefit, and he's going through life thinking that he can't buy a house because that VA program where he could buy a house with no money down, because that's the biggest barrier for most people, is coming up with that down payment. He's thinking, oh, well, I got to wait till I save up. And he thought that his benefit had expired, which is not the case. So that's one of the things I'd say right off the bat. Obviously, it's a 100% financing loan program, and it's a benefit that never expires. And there's just so many people out there walking around with that misconception.
Now, another question I have related to that, because I know some of this answer. I had a retired colonel that used his VA benefit and a VA loan, and he had 40% down. What's the advantage of that?
He had how much money down?
40%.
Okay, well, this is going to get into, maybe I'm going to keep this high level. If somebody's putting 40% down, we want to look at.
Why would they use that VA loan versus conventional?
Yeah, look, at 40% down, most likely a conventional loan is going to be the better way to go, most likely. Okay, but not in all cases. I'll give you an example. A conventional loan, if you've had a bankruptcy, you've got a longer waiting period before you're eligible for conventional financing. Whereas VA, it's 2 years. So, you may have this big down payment. Maybe you inherited it, you won the lottery, who knows? But if you just had a bankruptcy 2 years ago, you're not getting a conventional loan. I don't care if you're putting 95% down, right? Whereas VA, it's 2 years. And maybe you got a big down payment, but you've got some other credit blemishes that make you ineligible for conventional financing. The other reason is, depending on that price range, and we'll get into a couple of other benefits of the VA program. Well, I'll just mention it right now. There's no loan limit for a VA loan. Now, there used to be a 100% financing, an actual loan limit for 100% financing, and you could go over that if you started putting in a down payment. That changed January 1, 2020. It went away. So assuming you make enough money to qualify, you could buy a house for $3 million, zero down, with a VA loan.
I think for him, his loan was into the jumbo size at the time.
Well, that's where I was going with that.
Jumbo.
Well, that's where I was going with that. So let's say somebody's looking for a $2 million house and they're putting 40% down. It's going to be 800,000. So you're on $1.2 million loan. That's a jumbo loan, right? Jumbo loans, that's actually not even a conventional loan anymore. It's a loan with an entirely different set of guidelines, much stricter guidelines. And I mean like, higher minimum credit scores, no credit blemishes. You got to have maybe 6 months or 12 months reserves, and lower debt to income threshold. So it's a much tougher loan to get. So you go VA. Now, one thing about the VA loan, well, there's a lot of things about the VA loan, but
right.
Another huge benefit and advantage to the VA loan is that not only is it no money down, there's also no monthly mortgage insurance. And so conventional loan, unless you put 20% down, you're going to have mortgage insurance. Same thing with an FHA loan, you're going to have mortgage insurance, conventional loan, right? So VA, 0 down, no mortgage insurance. Now, in lieu of a monthly mortgage insurance, the VA does have what's called the VA funding fee. That's a one-time charge that the VA charges, but it gets rolled into the loan. So you don't even have to come out of pocket. So you actually can finance it and roll right in. So it's still 0 money down. But that funding fee is waived if a veteran has at least a 10% disability rating. Now, that's a half-truth too. The law actually says that the veteran is exempt from the funding fee if they're in receipt of VA compensation. In most cases, compensation begins at the 10% threshold. So veterans who are a little bit savvy out there may know that they could be 0% connected. So they have a disability rating of 0%. That's an actual thing in the veteran world. But if you're 0% and not in receipt of compensation, then you would not be exempt from the funding fee. But anyway, so another reason, sometimes, the funding fee is a charge, but hey, you can put 40% down. You have no funding fee if you're exempt because you have a disability rating. Now that's going to be a better performing loan. The interest rate's going to be better. There's no funding fee. So that may be why he went in VA.
I don't know the exact details, but are there any other specific awesome advantages that you want to highlight here today?
Yeah, so this is I'll highlight this advantage just real quick, and then that might be a good segue. I know into some other things we want to talk about. So let's talk about VA appraisals. VA appraisals. So the VA doesn't do the appraisal.
Right.
We as a lender don't do the appraisal. The way the VA loan program works is that all lenders who do VA loans, we order the appraisal through the VA, but then the VA assigns an appraiser who is not an employee of the United States government. They're not an employee of the VA. They're regular appraisers, and they've just simply signed up to be on the roster to get orders for work, right? And so they get an order that comes from the VA. They go do this VA appraisal. And then they get done with that one, they go down the street and they do a conventional appraisal. All right. So first of all, VA appraisers are regular appraisers. All right. Now, and I bring that up because there is, and we'll get into like the challenges in the marketplace that we've talked about offline here, Cary, but like but a huge advantage in the VA process, and a lot of people don't know this, is that if a VA appraiser is appraising a house, and let's say the purchase price is going to be $400,000, okay? And as they're finishing their work and they're kind of coming to the conclusion of their value, let's say the value that they're arriving at is going to be $390, like just below that purchase price. They actually have to stop and not complete the appraisal. And they have to notify us as the lender who requested the appraisal. And the process is called the Tidewater Initiative. And what it does, and this is unlike conventional and unlike FHA, because if it was conventional or FHA, the appraiser would have just done the appraisal at $390 and it would have come in low. With VA, they have to notify us and give us an opportunity to provide some additional information for that appraiser to consider before completing that report. So that's an
I've had to
advantage.
supply comps for those on the Tidewater.
And so that's a huge advantage. Like you have this
Gotten to, not had to.
Yeah.
That's good.
Dude, it's an opportunity, right? Like again, if it was FHA or conventional, the appraiser would have just finished it at $390 and you got a low appraisal. Now you're going down that road. VA, you have this opportunity. Now, it doesn't mean that the appraiser is going to come in at the value. But I have absolutely had numerous times where they've given us Tidewater saying, hey, your
Right.
appraisal as of right now is going to come in short. We give them information, and lo and behold, the appraisal comes in at value. So that's a huge advantage. Here's another huge advantage in the VA appraisal process. Let's say ultimately that appraisal does come in a little bit low. On a conventional or FHA, you're done. Not with VA. With VA, we get to do what's called an ROV, a reconsideration of value. And anybody who is a party to the transaction, that means the seller, either realtor, they're a party to the transaction, is allowed to request that the VA does a reconsideration of value. And unlike any other loan, the VA, in their sole discretion, upon request, can look at this report and go, you know what? The appraiser came in at $395. The sale price is $400. No, 400. They can bump it to 4. And I have done this many times. Now they'll never lower it. Okay, just FYI. But if they believe that there's some room, the VA in their sole discretion, without even talking to the appraiser, can bring it back up to the sale price. Huge advantage. That's called the ROV, reconsideration of value. Huge advantage in the VA loan process.
That's amazing. Well, everyone, here's some awesome advantages of the VA loan that, Andrew, I'm sure we can spend a lot of time going over this. Andrew knows these A to Z forwards and backwards. His link to his website is going to be here. So if you're looking in the field for a VA loan, and I believe you do normal loans too, but
Right.
he and his team can connect you up. And again, thank you for your service, and talk to you again soon.